truth about options trading is that most options expire worthless most of the time, which is why most people find it difficult to actually make money from trading options. Now, that is if you are buying the contracts, it's difficult, okay? Because most options expire worthless, and if you're buying a contract, you need it to be worth something. So what we do at EDS is we take the other side of the trade and we sell those contracts. And seeing as we're selling the contracts, that means we're short the contract, which means we want it to expire worthless. Because the difference between what we sell it for and what we buy it for is our profit, and we want to sell high, buy low. Okay, and that's exactly what I'm going to show you how to do, and I'm going to give you a strategy that I use as the bread and butter for my main portfolios. So what you want to do is you want to pull up a watch list of things that you can trade. You can use any watch list that you like. We're just using a 52-week near high watch list. Straight away, we've got Baba here that's looking quite nice. You want to make sure that you have IVR on your watch list, and you want to order everything from high to low IVR, because volatility plays a role on option prices. High volatility means high option prices, so we want to sell when volatility is high and play the contraction. And also volatility is mean reverting, and it's contracting most of the time in the market. So that's another reason why this strategy works so well. So you want to pick something that's kind of near its 52-week high. This is just going to give us a small directional bias. You can do the exact same thing but the opposite for 52-week near low. This simply just means, looking at a chart or something and just seeing where it's trading and seeing is it at the relative highs compared to the past year. So we're just going to take a look at Baba, and one other thing, you want to make sure that there are no earnings for the particular underlying over the next 45 days or so. So as long as you've ticked all of those things off the list, you can move on to the next stage, which is then picking an expiration date. Okay, so the expiration date that you want to pick needs to be between 30 and 60 days out in time, and it also needs to be a monthly, not a weekly or quarterly expiration date. There's only one here that actually fits that criteria, May 16th. There is earnings just before May 16th on May 13th, but we're planning to be out of this position well before then. So we're just going to open up May 16th, and now we can see the options change. So this is where you would typically, if you were buying contracts, this is where you'd be buying, you'd be picking your strike, picking whether it's a call or a put, etc. But as we mentioned, we're going to be doing the opposite, and we're going to be selling the contract. So we're going to make the small assumption that prices are going to mean revert a little bit, because we've already established Baba is at its 52-week near highs. So we are going to assume that prices are going to mean revert a little bit and move slightly downwards. But even if it doesn't move downwards, it can stay sideways and we'll make money. Even if it moves up a little bit, we'll still make money. So what we want to do is we want to pick a delta. So you want to have delta on your options chain as well, and you want to pick a delta that's around 30. So you've got 27 and 33 here. We're just going to go with the 33 at the 160 strike, and this is basically what the trade setup looks like. So we're going to sell the 160 here, and we want price to be below 160 at the point of expiration, and as long as it happens, we're going to keep all of the premium that we collect up front. Okay, so price right now is at 143. So if it stays where it is, we make money. If it goes down, we make money. If it goes up, we make money, just as long as it doesn't go higher than 160. Now our pop, which is probability of profit, is 78%. So that means we've got a 78% chance of making money on this trade, which, if you were to take the opposite side of this trade, you were to buy this contract and you were going to hope that the price was going to go higher, as you can see, our pop is 22%. So by being on the other side of the trade, we have the odds in our favor. And this is if we hold till expiration, which we do not have to do. We can get out of this trade at, say, 50% of max profit, which is personally what I do. And we have our P50 here, which shows us the probability of being able to get out at 50% profit at some point over the lifetime of the trade. And that's currently at about 87, 88%, or now it's about 86%. So you got between about an 85 and 90% chance of being successful on this trade if you were to get out 50% of max profit. So as you can see, the odds are already in our favor. Now, if we were to get filled at this mid price here, $5.55, we would collect $555 of premium up front, and our broker is going to require 4.3k in buying power to open this position. So as you can see now, we are getting a very high, or we're getting a respectable return on capital, over 10%, well over 10%. Now you might be thinking 4.3k, that's too much for small accounts. If you're a beginner, you might not want to allocate that much. There is an unlimited loss potential here, which you don't need to worry about as long as you know how to manage your trades properly and as long as you're sizing your positions correctly. But even still, some people may not want to do this for all the reasons we just mentioned. So what you want to do is use some of this premium and buy another contract a little bit further out. And as long as you're buying it further out from your short contract, you will always be able to bring in a net credit. So let's just go to the 170 strike. And now we've created a spread here, $10 wide spread. So we're going to collect $5.40 on the sell on the short contract, and we're going to pay $3.55 on the long contract. And overall, we're going to net $1.97. So we're going to collect $200 up front in premium, and our buying power requirement has significantly dropped now as well to $800. So we are making about a 25% return here, which is very, very nice. And this is in 58 days. This is not over the year. So you can compound this very aggressively. Now you do need to keep your buying power in check. We have created a free position sizing template. The link for this is in the description. You just enter in the size of your portfolio. So say if it's $12,000, you enter that, and then you can enter in the VIX level. Let's just say if it was 42.9. And then everything is going to be calculated for you. And as you can see here, it tells you all of the information. You don't need to do any guesswork. Just stick to this and you'll be fine. Do note that these are, your maximums. So you don't need to use the maximum amount of buying power on every trade. This is just your maximums. So do just keep that in mind. And if you would like to learn in more detail about what we do and how we do it, the link for this will also be in the description. Click on EDS Premium, get yourselves signed up. Once you're inside, you will have access to one of our portfolios that will allow you to see the positions that we place, how we manage risk, how we make adjustments, everything in real time. There's also a full course, so no prior knowledge is required. We will teach you everything that you need to know from start to finish. It's a private community as well, so if you do get stuck, you can simply speak with myself directly or with other like-minded individuals. There's a 100% money back guarantee. So after 6 months, once you've been through the course, follow some of our trades. If you're not profitable at that point, we'll just work with you for free until you are, or you can request a full refund. It's $9.99 a month to join. The price is so cheap right now because we've just launched. It will be increasing, but once you're in, the price is locked in at whatever price you get in at. So you are rewarded for getting in early. The aim of EDS Premium is to teach you the skill. We don't want to keep you dependent on us. And once you've learned it, it's very powerful. No one can take it from you. You can do this from anywhere in the world. And we aim to get you to a point of where you are self-sufficient within 6 to 12 months. So with that being said, I will see you guys on the inside.